Hi, my name's Brianne Stoffer, and I am here today with
J.R. St. Julien.
And we are going to talk to you about veteran loans here in San Diego. And to tell you a little bit about my guest here, J.R. St. Julien, he is a top producing realtor here in San Diego. He is a veteran himself, and he also specializes in VA home loans here in San Diego and was in the Navy as a helicopter pilot.
Yeah, thanks, Brianne. Thanks for having me. Always love to chat with veterans, help veterans. I really believe in the real estate is a true path to helping everyone grow wealth, but obviously with my military background, it's always nice to see veterans put this fantastic benefit to good use. So we'll educate you guys a little bit today on veteran loans here in San Diego.
Awesome. So let's get right into it, JR. If you could tell me a little bit about the different kinds of veteran loans here in San Diego and how that would best apply to them, that would be great.
All right, so the basic VA loan, first off, let me just start with the VA itself is not giving you the loan. So there's lenders that are approved to issue VA loans. The VA actually is guaranteeing 25% of the value of that loan. And so the VA is not issuing a loan, but it is a VA benefit to all of our active duty service members as well as veterans that departed the service with honorable discharge. So just to kind of lay that out there, because I get that question a lot if the VA is going to issue the loan. The VA doesn't issue the loan.
Yeah.
And then next, so you have a wide variety of options, fairly similar to the other loan products that are out there in the market. The good thing about VA loans is that you typically have some of the lowest rates that you can potentially find out of all the different loan programs. It allows the veterans to essentially buy a house with zero money down toward the, no down payment required toward the purchase.
Okay, that helps.
Yeah, that's nice.
Yeah.
And then it also eliminates any sort of mortgage insurance from the monthly payment. So typically, if you buy a loan with less than 20% down, you're going to have to put down some sort of, you're going to have to pay mortgage insurance on top of your monthly payment. With a VA loan, you don't have to do that, which is kind of nice.
And that's what they refer to as a PMI, when lenders are talking about that. Okay, awesome. So are there different timelines for these loans? How does that work?
Yeah, so you typically most folks, especially in today's market, are looking at fixed rate loans. The rates are super low, so it's nice to be able to lock in a rate for a fixed rate for the extended period of time for the life of the loan. But you can, so for fixed rate options, you have 15-year and 30-year options. So pretty standard. Typically, if you decide to get a 15-year option, your rate will be slightly less than if you decide to go with a 30-year option. But both are very good. Both have very good interest rates right now.
And that's because the bank or the lender is lending you less time. Like you're their person for 15 years or 30. Is that right?
Yes.
Okay.
So basically, for a 15-year loan, essentially the life of the loan is 15 years, and your payments are designed and amortized over a 15-year period, so that at the end of the 15-year period, your loan is completely paid off. For a 30-year loan, essentially it's amortized over 30 years, so at the end of the 30-year period, your loan is completely paid off. So naturally the 15-year loan will be a little bit less expensive when you're looking at it from an interest rate perspective, but then that typically would still result in a higher monthly payment because you're paying off the loan 15 years faster.
Awesome. Okay. So you explained a little bit about the different timelines of loans, 15 or 30 year. Are there different loans that apply to different types of houses? Like if I was a veteran and I wanted to remodel or do construction, is that available?
Yeah, so there is a VA renovation loan. So basically if you're looking at buying a house that needs to be remodeled or needs to be fixed up, you do have the option of purchasing a home using a VA renovation loan. You can also do a refinance if you already have a home and you want to do renovations on that home. And there's a couple different refi options. So you kind of have the standard refi option where you take money out.
Okay.
And so that's typically what you would use if you wanted to renovate your home. You would take money out. So that's an option. And then you also have what they call a VA streamline refinance. So it's not something that you would use to renovate your home, but it's basically in today's market, it may be something that you want to look into because the rates are incredibly low right now. And what a VA streamline refi is basically a low cost way to refinance your home and just lower your rate. Basically, the whole purpose is just to lower the rate. So right now, the rates are pretty low. So say you bought your home 2 years ago, if you haven't refinanced yet, you may want to consider it because the rates are very, very low.
Yeah, so I've heard. Well, awesome. How much could I get, hypothetically, if I was a veteran trying to use my veteran loan here in San Diego?
Well, the kind of cool thing that as of 2020, it's kind of incredible. You can essentially buy, if you have full eligibility, which means that you don't have a loan out on another home, a VA loan out on another home. So if you have your full eligibility, you can buy as much house as you can actually afford.
Wow.
So if you can qualify for a $1.5 million house, you can buy a $1.5 million house with no money down.
What about like 10 mil?
If you can qualify for it, you can buy it with no money down, which is pretty incredible.
Yeah.
Now that being said, if you do have some of your eligibility being used, you'll be limited to the conforming limits here in San Diego. So say you own say you owe $250,000 on a house in, I don't know, Virginia or somewhere, and you want to come and buy a home in San Diego, and you don't want to refinance that home, you have it at a good interest rate, whatever it may be. The eligibility amount in San Diego, if you have eligibility being used elsewhere, is capped at $701,500. So if you have let's just make that $700 for easy conversation. So if you have $250,000 of the eligibility being used, that means you would have about $500,000 remaining in San Diego, and then you can use that $500,000 to buy your house here in San Diego.
Okay, so
and that's with zero down still.
Oh wow, yeah. So it could cover that amount. Say I wanted to buy something more than 500,000. Say I wanted 800,000. So would the VA, the government, insure 500 of that, and then I just pay on top of that? How does that work?
Yeah, so basically the way that would work is if you have 250 being used elsewhere and you have 500 remaining here in San Diego, you can buy a house, let's say at 600,000,
okay.
And 500 of it would be kind of the standard, zero down. So if the house was only 500,000, you put zero down. But for every amount that you go above that $500,000 limit, you would pay 25% of that amount as your down payment. So 600,000, that would be a $25,000 down payment. 700,000, that would be a $50,000 down payment.
Okay.
Which is nice because it still allows you typically to pay less down as what you normally would for like a conventional loan, and still take advantage of all the VA benefits, the low interest and no PMI, et cetera.
Cool. Okay, so to get a veteran loan here in San Diego, are there any costs or fees related to obtaining that?
There are. They call it the VA funding fee. So if you're trying to qualify for a veteran loan in San Diego, there is a cost associated with it. And so the first time you're going to use that, the VA funding fee is set at 2.3%. Now that being said, that funding fee is waived if you have a VA approved disability of 10% or greater. Then you actually have no funding fee. If you're going to use that loan, if you're going to make a second VA home loan purchase, so say you bought a house 10 years ago, and now you're ready to buy another one using your VA home loan benefit, the funding fee increases to 3.6%. And that's for all future purchases. So you can use your VA benefit over and over again as long as you have eligibility. And for multiple time uses, it's going to be at 3.6%. And again, that's waived if you have a disability of 10%. Now that being said, if you decide that you do want to put some money down, if you put 5% down, your funding fee drops down to 1.65%. Whether it's the first time or the second time or the third time, it's the same. And if you put 10% down, that funding fee drops to 1.4% regardless of which time you use it.
Okay.
And again, it's completely waived if you are a disabled vet with at least a 10% VA disability. And then lastly, that VA streamlined refinance that I mentioned, with the sole purpose of just lowering your interest rate, the funding fee for that is just 0.5%. And they do that because basically the only reason you're doing that is not to take money out of your home, but just to lower the interest rate. So they wanted to make sure it was cheap for you to be able to take advantage of our great interest rates that we're having right now. So if you haven't done that and you think you may be able to get a lower rate, now's a good time to look into that.
That's awesome. It sounds like mortgage rates in general, and also being a veteran, getting a home loan here in San Diego is just awesome right now.
It is.
Cool.
It's a great benefit, and we really would like to see more veterans use it.
All right, well, thank you so much, JR. It sounds like you're a pro and have a handle on this. So if you guys need any help or have any other questions, there is a link below, and it's the Dream Home Questionnaire that you can fill out and get in touch with JR directly, so this specialist can help you find a home here in San Diego. We do have other videos for you to check out, so go ahead and click on those, and we'll see you next time. Thank you.
Look forward to hearing from you.
All right.